The United States government shutdown has entered its 15th day, leaving key economic data unpublished now for more than 2 weeks. This absence of information could soon concern policymakers, both in America and abroad, given the US's significant influence on the global economy. Fiona Cincotta is an analyst at Citi Index. Fiona, how significant is this data blackout for markets and policymakers?
I mean, the longer that it goes on for, the more significant it becomes because, this economic data is what the Fed uses, it's what the market uses to be able to assess the health of the US economy and then what the Federal Reserve will likely do as far as interest rates are concerned. We did hear from Federal Reserve Chair Jerome Powell yesterday, and he had suggested that private measures and the Fed's internal research is sufficient at the moment to be able to assess that the US jobs market is cooling and that inflation expectations are anchored. But as I said, the longer that this goes on for, the more blind the Fed will be flying and the markets.
I wonder what the immediate consequences are for the bond market, particularly treasuries, when inflation data and Fed commentary go dark, as it were.
To have sort of near-term volatility. And also this sort of flight to safety, which is when the investors sort of move into treasuries, which actually pulls the yield lower. And now, obviously, we're having this at the same time that we're also seeing the Federal Reserve suggest that they are potentially going to be cutting interest rates again in October, and also with the US-China trade tensions ramping up again, which is also sort of driving that slight flight to safety. So actually the 10-year Treasury yield at the moment, we're seeing that down, hovering around levels that were last seen in April.
And how does this data darkness in the United States impact global markets? I'm thinking especially of Japan.
Yeah, so Japan is particularly sensitive to the US yield moves, and I think the biggest problem that we're going to have here is trying to be able to assess that differential between Japanese yields and US yields when we're not really necessarily knowing the data to be able to support the US yield and where it should be. So what we would also expect to see potentially is that strengthening of Japanese yen. It's a safe haven. And we have actually seen it strengthen over the last couple of days, but it's also worth keeping in mind that there is some political uncertainty happening in Japan at the moment, which could actually limit potential gains that we may have otherwise seen in the Japanese yen.
Fiona, your take on Morgan Stanley and Bank of America results out now, both topping estimates. I wonder, what does that tell us about the US economy?
Yeah, so some blowout results here from the banks, especially that investment banking arm, similar to what we saw from JP Morgan yesterday. And what we're seeing is, the environment does seem to be ripe for increased investment banking activities, deal making, IPOs, M&As, mergers and acquisitions, basically because we seem to be seeing resilient growth at a time where interest rates are expected to come down, and that does provide a pretty solid base for economic activity, which is an encouraging sign.
Fiona, good to see you. Thanks so much for coming back on the programme again. Fiona Cincotta, the analyst at Citi Index.